Date, type, title, issuer, entity. The 17th of March 2023. Rating action. Moody's downgrades First Republic Bank's ratings, issuer rating to B2 from Baa1, and maintains ratings under review for downgrade. Moody's Investors Service, New York, March 17, 2023. Moody's Investors Service, Moody's, has today downgraded all long-term ratings and assessments of First Republic Bank, First Republic, and maintained the review for downgrade. First Republic's long-term issuer rating and local currency subordinate ratings were downgraded to B2 from Baa1, and preferred stock non-cumulative rating was downgraded to Caa1, HYB, from Baa3, HYB. The rating agency also downgraded First Republic's long-term local and foreign currency counterparty risk rating to Ba2 from A3, long-term local currency bank deposit rating to Baa3 from A1, long-term counterparty risk assessment to Ba1, CR, from A2, CR, baseline credit assessment, BCA, and adjusted BCA to B1 from A3. The short-term local currency bank deposit rating and short-term counterparty risk assessment were also downgraded to P3 and NP, CR, from P1 and P1, CR, respectively, and the short-term bank deposit rating remains on review for downgrade. The bank's local and foreign currency short-term counterparty risk ratings were also downgraded to NP from P2. The outlook on the issuer rating and long-term bank deposits remain rating under review. Ratings rationale. The downgrade of the BCA and other long-term assessments and ratings reflect the deterioration in the bank's financial profile and the significant challenges First Republic Bank faces over the medium term in light of its increased reliance on short-term and higher-cost wholesale funding due to deposit outflows. On the 16th of March, the company announced that over the previous week its borrowings from the Federal Reserve varied from $20 billion to $109 billion. On the 16th of March, the bank received $30 billion in deposits with an initial term of 120 days from a consortium of 11 of the largest U.S. banks. Moody's believes the high cost of these borrowings, combined with the high proportion of fixed-rate assets at the bank, is likely to have a large negative impact on First Republic's core profitability in coming quarters. In addition, the rating agency noted that while the news of the banking consortium's deposits is positive in the short run, the longer-run path for the bank back to sustained profitability remains uncertain. In addition, although the bank announced that daily deposit outflows have slowed considerably, Moody's believes that with 68% of Q4 2022 deposits uninsured that the bank already has experienced significant deposit loss eroding the strength of the bank's franchise. Furthermore, given the relatively short-term nature of most of the bank's new funding, First Republic still faces the eventual need to sell assets to repay these obligations. This could lead to the crystallization of the unrealized losses on its AFS or HTM securities, which as of December 2022 represented 37.7% of its Common Equity Tier 1 capital. Its ability to sell residential mortgage loans, the other major asset on its balance sheet, without realizing losses that negatively affect capital is constrained. The 17th of March 2023. Credit opinion. Zions Bancorporation, National Association. Update following ratings being placed on review for downgrade. Our credit view of this issuer reflects its solid asset quality offset by weakening capitalization and funding. The 17th of March 2023. Credit opinion. UMB Financial Corporation. Update following ratings being placed on review for downgrade. Our credit view of this issuer reflects its funding challenges, ALM risks, and strong loan quality. The 17th of March 2023. Credit opinion. Intrust Financial Corporation. Update following ratings being placed on review for downgrade. Our credit view of this issuer reflects the challenges of its unrealized securities losses, weak capitalization, some reliance on uninsured deposits and favorable profitability. The 17th of March 2023. Credit opinion. Comerica Incorporated. Update following ratings being placed on review for downgrade. Our credit view of this issuer reflects a strong loan quality performance, constrained by its increased reliance on market funding and uninsured deposits. The 16th of March 2023. Sector comment. Banks, U.S. Federal Reserve data shows sharp rise in discount window borrowings in light of banking distress. On the 15th of March, the Fed released the weekly H.4.1 data on its balance sheet, which showed a historic increase in discount window lending to U.S. banks that exceeded levels seen during 2008. The 16th of March 2023. Credit opinion. Western Alliance Bancorporation. Update following ratings being placed on review for downgrade. Our credit view of this issuer reflects its commercial real estate concentration with a sizable higher risk construction component. The 16th of March 2023. Sector comment. Decentralized finance and digital assets. Cross-region. USD coins fall below $1 raises concerns about stablecoins prospects. USDC's sudden fall in value highlights the unpredictability of interlinkages between traditional and decentralized finance and shows that fiat-backed stablecoins can be highly volatile. The 14th of March 2023. Credit opinion. Morgan Stanley. Update to credit analysis following ratings affirmation. Our credit view of Morgan Stanley reflects its stable profitability and strong capital, against its increasing capital distributions to shareholders. The 13th of March 2023. Sector comment. Banks, U.S. Rapid monetary tightening, weak risk management amplify banks' underlying asset-liability risk. Significant Fed tightening and weak risk management have exacerbated banks' asset-liability strains, which resulted in actions on select banks and has broad-based implications for the system.